welcome everyone. Thanks for joining. We've just got a couple of late joiners, so while we're just waiting for them to come in, I'll just say a quick g'day. I'm Pete Wargent from Buyers Buyers. I'm joined today by Alistair Lias. Al, welcome. Great to have you on.
G'day, Pete. Yeah, great to be here, and thank you everyone for jumping on tonight. And great to have you with us wherever you are in Australia. So hopefully you enjoyed the webinar. We're going to be letting you ask a few questions as you go. So at the very end, we're going to answer any questions that do come through. So please do feel free to ask and put some information on there. There will be a few polls that are going to jump up tonight as well. We always really do appreciate that feedback and take that into account. So if you've got the time, please feel free to jump on and answer those polls.
Fantastic. Well, I'm just going to share my share. Just got a couple of slides to run through. Al, can you say that okay?
Yep, loud and clear, Pete.
Okay, all right. Well, let's today we're going to talk a little bit about those end of year blues and just trying to get some of your clients across the line. We often find at this time of year we've got clients left over who they've got their mortgage pre-approval earlier in the year, but then they've read a few headlines about falling prices or the potential for further interest rate hikes, and they're just sitting on the sidelines. So we're not going to spend ages and ages tonight, but we're just going to come with a few thoughts on how to get those buyers across the line, making a commitment and actually getting a purchase done and a loan actually written. Just a little bit about what we do. We offer property buying services all around the country. So we've got buyers agents in every state, in every territory. We can offer referral fees where you send clients our way and we execute on a purchase for you. But as we'll cover today, we also have another service on the advice side of the equation. So if you've got clients who just aren't quite sure on what they should be doing next, we have a property strategy service. We also have an informal or less formal 1 hour service called WeGuide, which is just a telephone conversation, which we often find just helps to get your clients unstuck. I think quite often there's a lot of noise out there, a lot of information. So that's one of the things that we can do. You've got clients who just can't pull the trigger or can't get across the line. Al, do you just want to give us a quick overview on what you do there?
Yeah, look, WeGuide's a short session we do with people. Look, it's one of those ones where there's a lot of companies out there. They're always doing these sessions and they've always got something to sell. So for us, it's more about something to tell, not something to sell. It's really just about giving people information they need. We often see that people are online asking questions, trying to get expert advice from different areas and not always getting that right advice. So what we like to do is take a very non-biased approach to it and really just sit down with people and go through their different questions depending on their situation. So that could be, we're a first-time investor. What are the risks? It could be we're going to auction this Saturday. We're going to bid and they don't understand how it works or they're a bit nervous. So really just working through with people on a bespoke level to make sure we're addressing their needs. It's a very cost-effective service that can actually save them a lot of money and obviously a lot of heartache too, where a lot of people do make those mistakes.
Great. Yeah, and we do actually have on our website, if you've got time to check it out, buyersbuyers.com.au, we do have a suite of reports there, reporting tools that your clients can access. They can just help them to make a decision. So one of the most popular reports we have is called Where to Buy, and the client can simply drop in their budgets, their requirements in terms of what type of property they're looking for investors, the required rental yield. And there's an automated report there that just comes out with a suburb shortlist, and it's all fully backed by the most up-to-date figures and data. Pretty sophisticated set of tools we've built out there. So I guess some of the challenges that we're seeing in the market, and no doubt you guys are seeing as well. As I mentioned, a lot of people getting their mortgage pre-approval, but in many cases either letting it lapse or just sitting on the sidelines for too long, largely due to the aforementioned analysis paralysis. A lot of noise in the media at the moment about whether prices will fall 12% or 13%. A lot of people aren't seeing the wood for the trees at the moment. That's one of the areas, as Al mentioned, where we can just help people to crystallize a strategy and then to actually take action. So Al, do you just want to add a bit more texture there? As I mentioned, if you've got clients who come on board and actually use our full buyer's agency service, we can pay a referral fee to mortgage brokers, and that's always been a successful win-win for both parties. Al?
Yeah, I think, Pete, along the way that obviously people find a lot of stopping blocks, and that may hold up their decision making. If people aren't really comfortable to make a managed decision on, well, do we now buy a property? Obviously, a lot of those things in the market where interest rates are rising, people they talk to other people. Everyone's a bit of an expert in this industry, as you know, and they might receive that wrong advice. So it's about really helping brokers get people off that fence, because we know that you spend a lot of time with buyers that just don't go anywhere, they can't make that decision. So really where we come in is to help them make that decision, give them some really good non-biased advice, so that way at least when they do make that decision, they're very comfortable to actually do it. There's a lot of people out there that go and get their finance and then really just don't do anything, and obviously that takes up your time as a broker, having to then later on refinance, or if they're going through the process and they can't find something to purchase. What we do is we really just take a lot of the issues out of the whole process, just by doing what we do best, and that's helping people buy property. Now, with us, it really is about getting, same as you, it's about getting the buyers to where they need to be, their destination, and making sure that we're in their corner, and we're making the whole process as streamlined as possible. So really that means that you're really adding another service onto your own service to really get them to the place that they need to be.
Yeah, nicely summarised. Thanks, Al. So just to just a bullet point there, I guess what we've just been speaking about is a value add service to help get clients across the line. We also do some live events and seminars or webinars, particularly at the moment. So that's another way in which we can work together with brokers. It can also help from a client attracting clients perspective. We're just going to do a couple of slides on what's been going on in the market. I guess anyone who isn't living under a rock would have been following all of the media headlines in the past 6 months in terms of what's been going on with interest rates. I guess if you look at, there's a lot of talking heads views out there. If you look at what financial markets are pricing, well, obviously the Reserve Bank doesn't meet in January. Next meeting's in February. Financial markets are still potentially looking at 1 or 2 more rate hikes, but anyway you look at it, we're getting closer to the top of the interest rate cycle. The terminal cash rate target maybe 3.1, but there could yet be another couple of hikes depending on how the inflation figures play out. I guess what we would be hoping for from a buyer's agency perspective, and no doubt the same for mortgage brokers, is a bit more leeway from APRA on the lending assessment buffer, but as yet there's been no noises from the regulator in terms of any changes to the lending assessment buffer. So we're seeing in terms of the clients we're dealing with, borrowing capacities are a bit lower than they were, certainly lower than they were in 2021. So that's pushed a lot of investors into markets like Adelaide. More recently, Perth has become more popular with rental vacancies as tight as we've ever seen in Western Australia. And also, I guess, relatively speaking, lower price entry points. I think the other markets that are going to come back onto the radar next year, from mid-January, first home buyers in New South Wales will be able to opt to not pay stamp duty up to the $1.5 million price point. So there's been a bit of first home buyers sitting on the sidelines in Sydney and regional New South Wales, but we think that will change from the new year when there's the opportunity to not pay stamp duty, because on $1 million purchase that could save around $40,000. So there's a few markets where people are active and looking. Likewise, Southeast Queensland is always popular with our investor clients. So if you've got clients who are looking as investors, we buy all around the country. We're not biased to any one particular location. And if the budget won't stretch to Sydney or Melbourne, there's plenty of other opportunities around the country that we can guide you to. Al, I guess in terms of the sorts of stuff we've been buying, I think you can largely disregard media headlines as it relates to property price commentary. I think the key thing is there have been very few forced sellers out there because we've got full employment at the moment, but there's far less of the FOMO or the frenzy that we were seeing around October 2021. So if you're trying to get buyers across the line to purchase, I guess the thing to advise them is there isn't that much stock on the market, but the opportunity for negotiating a better price and better terms is far and away better than it was around about a year ago or 15 months ago. And in many cases, you will get a lower price as a result of the market conditions. Al, I guess it depends a little bit on the market you're buying in. I guess some markets are holding up better than others.
Yeah, a lot of it comes down, as you know, to the obviously the general budget in the area, what the vacancy rates are like it as well. So it is very different due to different price points as well. So it is good to be able to again get back into it. What it was, obviously this time last year or the year before, a lot of it was just around, not about getting you a cheaper house or property. It was really more about just getting you something and at the right price. Now we've got that little bit of leverage where, a good buyer's agent in general should be able to use their negotiation skills to speed up that process, but really start to get the price at the right area.
Yeah, you made a good point there in terms of the price changes. The declines have largely been driven by the top price quartile of the market. So particularly in Sydney, the top end of the market is called off. Often in places that experience the biggest boom. So if you look at places like the Northern Beaches in Sydney, houses there were up over 50% through the pandemic in many cases. So it's no surprise that prices are coming back down from the highs. But not every market has seen these kind of declines. So it is largely a case-by-case basis. Generally speaking, the bottom end of the market has held up a bit better. This is just a graph of asking prices in Sydney. So as you can see, unit prices, this is Brisbane, the Brisbane graph. Asking prices are off the highs, but it's by no means a massive decline. And in fact, unit prices, Al, in many cases have been rising in Brisbane with the rental market so tight. Suburbs like New Farm and some of the blue chip suburbs like Tenerife, we've often seen unit prices trending higher. So I guess it just underscores that while some parts of the market are struggling, particularly the markets that really boomed during the pandemic, like the Sunshine Coast, other parts of the market aren't actually faring that badly, largely because the economy is so hot.
Yeah, it's interesting with the apartment market. Obviously, Brisbane's done very, very little in that area for quite a long time. And I guess just with all the prices going up so quickly, then the apartments have sort of gone up as well. But, and I do get a lot of people, you just get a lot of people talking out there about wanting to buy. And everyone talks about Southeast Queensland. So they feel that, look, we really need to get into that market, but we can't afford to buy a house, and we don't want to afford we don't really want to buy in some of the suburbs that aren't necessarily gentrifying. So they're starting to look at apartments and potentially townhouses. Townhouses not so bad, but really investing. Our suggestion is think of the long term. And although it's a pretty good prospect, you might think now, then there's far better prospects out there. In other cities, and this is what people don't understand. So we do like to go through that with them and explain, well, what is a land to asset ratio? How does that actually work? And when people actually get that information, they're a lot more comfortable with it because, a lot of people say, well, we thought it was Southeast Queensland, but what you're saying, we understand there's just a better long-term investment out there.
Yeah, I think that's the thing really where we can add some value is just giving people some clarity on what's the best use of their borrowing capacity, what's the best bang for the buck. I think especially first-time buyers, they have to almost think with an investor hat on these days because that first decision, when you get on the housing ladder, getting the first decision right is so critically important because then you can then use the results from that first purchase to leverage on and go on to make better decisions down the track. If you get the first purchase wrong, get yourself into negative equity. We often see that with clients who bought off the plan, for example. We don't generally do the new property largely for that reason because the risks are higher. So it's really just helping your clients to make the right decision for them and avoid those catastrophic mistakes that people make if they don't do the right due diligence and negotiation. In terms of the rental market, it's extremely tight. The lowest vacancy rates we've seen on record now. If you look at Domain's figures, SQM research figures here, pretty much all of the providers are showing the same thing, and that's immigration is starting to ramp up again. Investors haven't been very active for most of the past few years for various reasons. Largely, access to credit has been a big part of it. So rents are rising very strongly. There's also been a big shift towards short stay lets and the use of providers like Airbnb. So that's maybe just slightly impacting these figures to some degree. But anyway, you look at it, the rental markets are extremely tight. So this is one of the factors that would encourage first home buyers back into the market next year. We're finally starting to get to see some income growth, which I guess is one thing which will help a little bit on the borrowing capacity side of things. Obviously, this has been far outweighed by the change in mortgage rates over the past 6 months or so since May. But at least we are starting to see some income growth again and a bit more confidence for people in the employment market. Alistair, in terms of getting clients across the line, getting them to yes, traditionally the December period through to Australia Day weekend is a very quiet period for real estate. Nobody really wants to launch an auction campaign through that period. But we still have buyers agents out there in the market. In particular in Brisbane, we've been picking up some off-market deals in recent weeks. So even though clients are starting to get into holiday mode, thinking about the silly season, it's not actually a bad time. There's not so much competition around at the moment. So if you've got people with mortgage pre-approval and you think there are a chance of actually getting something bought before February, even though stock listings are overall are low, there's still a good opportunity to buy out there, either by looking at pre-market properties or off-market properties, or even just getting to open homes without much competition. We're still, even at this point in the year, we've still got a number of engagements still going along at full pace, and not necessarily a bad time to try and get a client across the line.
Yeah, it's sort of funny, Pete. I mean, I've been in the industry now in different capacities for around about 25 years, 26 years, and it's certainly changed. I remember, up until maybe 12 years ago, really 2 weeks before, 2 weeks after Christmas, nothing would happen, and that's probably still very true. Christmas through to maybe the 4th or 5th of Jan, whereas really, I think the internet's made a big difference to the working patterns of a lot of people in the industry, because I know myself working up until basically Christmas Eve. So there's still people that are very active out there. At the same time, in saying that, if people sort of do drop off and there's still listings there and people are under a bit of pressure and they like a result before Christmas, that sits us in a better position too to negotiate, because obviously less competition, understanding that getting the right house for the right price might be there prior to that period. So it's not as if everything just stops. Some people will stop, but there's certainly some good opportunities out there for sure.
Got somebody shot through a question on investor purchases. If you've got clients with a budget at the moment, Al, of that's under 1 million, so there's sort of generally the lower price points, what sort of markets are people looking at making a purchase in?
Yeah, I mean, obviously budget really is the big driver when it comes down to at the end of the day. And we always say that obviously area is a very big part of what is going to make an A-grade asset. That's mainly what it is made up of. And a lot of people make the mistake of going to areas that they think are going to be A-grade assets, but their budget really doesn't suit that need. So really looking at down that line. Obviously, Southeast Queensland is still a really good area for us. If we're talking under $1 million, anywhere between maybe 750 and $1 million, some really good opportunities out there in different areas that we can certainly explore. And then really around that sort of 500, 600, maybe 650. Adelaide is looking really good. I mean, Pete, we see that some of these areas you've got less than 1% vacancy rate. And I mean, in my time, I think I've seen that once in very few areas. So that's a pretty big stat with people coming back into the country, that the supply is not about to come on board with that as well. But even we do try and stick to metro areas as best we can, but even places like Adelaide are starting to get that little bit up. There's a lot of buyers out there, investors floating around 400 to 500. One area, and I think you mentioned earlier, Pete, is Perth. We hadn't sort of been that big on Perth, but obviously in the past there'd been some pretty big jumps, and then there'd been some pretty big falls. But the affordability there now, and also looking at some of the vacancy rates, if we're that little bit more careful, I think we can actually pick up some really good buys over there as well. There's a lot of investors, I think, that are already headed over there. I think it's really, if we look at the metro markets, that's as far as that goes. And lower buys, you're looking Perth, a little bit more Adelaide, then obviously Southeast Queensland. If you're looking under the sub 1 million, there's been some relatively significant drops in the higher price things in places like Newcastle, but definitely long term, that's looking very positive as well, and potentially some of the satellite cities, Bendigo, those sorts of places.
Makes sense. And a couple of key points that you mentioned there. We generally, if the budget permits, we pick houses on good blocks of land as opposed to units or apartments. a high land to asset ratio is usually key for a good investment. We often find the best bang for the buck for an investor is if they can buy a house which is in a good enough condition, an established home to rent out to a young professional couple or a young family potentially. Something that's in good enough condition to rent out today, but it's got some future value add potential, and ideally a land value to asset ratio of 60% or higher. That's the kind of bread and butter purchase for us. And as Al mentioned, we've got a suite of reporting tools that can help inform the decision in terms of the best locations, the best property types, but different for first-time buyers, of course. They're often guided more by place of work and often by a more constrained budget, in which case we do sometimes buy units or apartments for them. So I guess just to summarize on state of the market, well, everybody knows we've been in a rising interest rate environment, partly because the economy's been running red hot or overheating in some cases, and largely because of supply chain issues. We've just had a real shortage of people coming into the country for a couple of years for obvious reasons, but thankfully that's just starting to right itself now. So hopefully we're near the peak now of the interest rate cycle, which will be welcome relief when it does happen. Stock levels, generally speaking, around the country are pretty tight, but in saying that, we're still getting some good purchases across the line. I think the key thing for mortgage brokers at the moment, there's a lot of people tentatively interested in buying property, but they're looking for some kind of social proof or validation that they're doing the right thing. So that's where our WeGuide service can really come into its own, just a 1 hour conversation, give people some guidance. And if they want a more formal property strategy plan, we can do that too. We do have a service called WePlan, which is building a 10-year property plan for your clients. So I guess those are a couple of the ways that we can help to get your buyers to a yes. And obviously, if you need buyers agency services, that's what we specialize in. So I guess what we aim to do overall is just help your clients to buy with less time. So a quicker property purchase, 4 to 6 weeks would be normal. Obviously varies a little bit depending on the brief, with less cost. So our top buyers agents, if they're doing their job well, should save at least the fee back in the price negotiation of better terms, and also by picking a better quality asset that performs better for the client over the medium and longer term, and that can help them to move on to their next purchase as well. We de-risk the process with our due diligence and other processes. Having a professional property market insider on the buyer's side obviously really helps, and in particular just reducing the stress. All of the market research and questionnaires show that buying property is one of the most stressful things people ever do, particularly the first home buyer cohort. So if we can remove some of that stress for the client, then that's a win-win as well. So Al, anything I've missed there in terms of the state of the market?
Oh, I think you're pretty well spot on there, Pete. And look, obviously the way we work with brokers is can be different to the brokerage. Not everyone's exactly the same, so we just love to be flexible, working with people differently. Whether we're jumping on your team calls, we've got lots of different services that we can actually offer. So from our perspective, feel free to get in touch if you need a little bit more information on any of the slides tonight. Would like to know about a particular area in the market that you're actually invested in. More than happy to have a chat there as well.
So do get in contact. Our website's there just on the slide. If you want to shoot Alistair or I an email, we'll send out an email after the end of the broadcast tonight, and we've also got recording for anyone who couldn't make it live. So look, I don't think we'll keep anyone too late at this time of year. So thanks for joining. Really appreciate all the people who jumped on tonight. It's great to see you, and look forward to chatting with you all again in due course. And Alistair, thanks as well for your input tonight.
Pete, no, thanks everyone, and feel free to get in touch. Love to chat.